A recent study published on the Social Science Research Network has identified 186 banks across the country that may fail if half of their depositors withdraw their funds quickly. Even those depositors with up to $250,000 in the bank could face problems getting their cash if these institutions experience a run similar to what happened to Silicon Valley Bank, SVB, last week. One reason for this vulnerability is that many of these banks hold a significant amount of their assets in interest rate sensitive financial instruments like government bonds and mortgage-backed securities. The value of these investments dropped sharply as the Federal Reserve hiked interest rates, and many banks may have trouble selling them for their full value. SVB, for example, had parked much of its cash in long-term government bonds, which are usually safe but not as valuable when interest rates rise. To meet customer demands for withdrawals, the bank had to sell some of these bonds at a lower price than it had originally paid for them, leading to a nearly $2 billion loss. When SVB announced this loss, its customers began to worry that the bank was insolvent and rushed to withdraw their money. This created a social media-fueled panic, and the federal government had to step in and promise to back all depositors, not just those with up to $250,000, in order to prevent a wider panic among customers of other banks of similar size. The recent study shows that a large number of other banks may be vulnerable to similar risks if their worried customers start withdrawing their deposits. The economists who conducted the study estimated that there could be a $2 trillion loss in the market value of these banks' assets, putting them at risk of a run without government intervention or recapitalization. In essence, many banks across the country may be vulnerable to the same risks that caused Silicon Valley Bank to lose money and prompted a run on its deposits. This is due to the significant amount of assets they hold in interest rate sensitive financial instruments, which have dropped in value as interest rates have risen. If a high percentage of customers withdraw their deposits, these banks could fail unless the government steps in to back all depositors. Be sure to like and subscribe for more helpful financial tips and updates. Also share this video with anyone who deserves to know this information.